The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
19th day of December, and the Dow is actually down. It's down 51 points at 24,739. So we've got the E-mini down 8. This is very interesting. At the and let me just say, it was great to see so many Tigers last night at the meeting of the Boston Investors Group and Investors Business Daily meetup, annual year-end meetup party, and we had a good time. And we covered a lot of ground, and it was nice to see so many Tigers. Actually, it was surprising. A couple of Tigers said, "Yep, we're starting to trade a lot more now. We're getting into it. We've learned so much from TFNN, all the different hosts on TFNN. What a great resource." I agreed with him. I think it's a terrific resource. And thank you for coming, and thank you for being TFNN supporters. So the E-mini is down 725. What I had shown yesterday to subscribers, then again today, is that we've bumped into a resistance area in the E-mini. The MACD is still good. The stochastic is still good at 91%. On-balance volume is good. But there are signs to say that we could get one more spike maybe when the bullies passed. It might be actually a sell the news thing, but we could get one more spike. That's fine. But what really is important right now is the fact that on every level, and this is what I had said last night, at this moment I said, on every level, all the indexes, daily, weekly, monthly, and even some of the 120-minute charts are acting really well. There are a couple of little chinks in the armor, couple of little cracks that are saying to me, be a little careful now because the upside could be somewhat limited, but it does open up sideways to slightly down potential. And if the selling kicks in, it could become a lot heavier. Will the market hold up into January just for tax purposes, let's say? Now, for years, people have asked me, should we sell? We've got good profits, and to take advantage of the tax situation, or try to keep should we hold to try to keep our profits over a year and to have some kind of tax benefit? And I've said to them, look at the chart, because I've seen this too many times where charts are suggesting that they could pull back sharp enough to negate any tax benefits. Treat them as two separate things. So, got that out of the way. And what I am looking at here is that this is still very good action. Inside bar today, didn't make a new high. The high of 26.98 on the 18th was 26.98 so far on the 19th. But in the 120-minute chart, we had that technique that we discovered a long time ago, discussed it many times here, seen it in the futures, the currency pairs a lot. It's the Chapman Wave peak C1, C2. And sometimes, and here's a good example of it, just occasionally, this is a stock that we have, you can make your peak C1, C2, but if it's just a minor pullback, there's a good chance you're going to go to a D. You just saw that in Reliance Steel. It went to a peak C1, C2 at 83, what was that, 84.41, double topped at 84.36, peak C1, C2, and then pulls back to the 9-period moving average. Pop yesterday goes to leg D, and now it's having a little bit of a consolidation after that pop to the upside. So let's go back to what we were looking at here. We're looking at the ESH18, that's the March E-mini. There it is. And you've got peak C1, C2. But this pullback's a little deeper. It's going to be tough to go to D. But if you go to a D, this is the kind of pattern that says, like you saw in Reliance Steel, a spike to the upside to give you that missing D, and then a pullback again. So we'll watch that. Meantime, parameters to watch at 2686.75. A break above 2703 is really positive, and if it holds, that is, and a pullback below 2683 is not really negative, but it is short term, and it's a short term negative to say that the 120-minute chart is, at least for the very near term, has gone to a sell mode. Let's get back to the indices. We'll do this quickly. I want to go through. We'll do this quickly because there's a lot to talk about right here. I think we're cusping. We're getting close to at least a decent pullback. The Dow did not make a new high so far today. 24,876 is the high of yesterday. Peak E. For my subscribers, I really thought about yesterday, should we hold that short position because we already had like a 1% risk. And then I thought, no, I can't take that chance, only because this is an unknown when the bill comes out, when it's passed. Is the market going to spiral to the upside huge for another move to the upside? Or is this it? My thinking is this is it. So the Dow's pulled back down 44, no big deal. But I tell you something, I made it clear last night as well. A close in the Dow for two, preferably consecutive, but 2 out of 3 sessions under the 9-period moving average of 24.53 is kind of a warning. But a close under 24.350 at any point says we have started the consolidation in the daily at least. But the weekly chart, you'll see, look at the candles that are forming here. This is very early in the week. It's not even the second session. We're just into the beginning of the second session. This candle is going to tell us a lot because it's getting very extended in the weekly. Monthly is still very positive. Let's run to the S&P. We don't have to do any talking there because I can just give you the parameters. S&P's made a potential peak F. It becomes, it could even go higher for a G/C based on the MACD being strong, stochastic at 88% good. Make the parameters real clear. In the next 2 to 3 weeks, the close below 2663 says, uh-oh, watch out. And a move above 2703, and it's at 2684 right now. 2703 says, hey, that's really good. Let's go to the QQQ series. QQQ trading down quite sharply. Fill the gap. 157.49, making this a peak E. Once again, last time we discussed this, and I made quite clear, as I have right here on the show, the close in the Qs below 155.50 says, uh-oh, be careful. Daily into a sell signal to sell mode probably quite quickly. And the weekly chart, we'll have to watch that. So this is how it is. A push into the 159.30s. I just have to say, you know what? That is really good action. Those are the parameters. Make it clear. IWM having a down day today, down 68 cents at 153.62. Failing to make that leg D so far. Maybe it needs the pass to spike into the 155.42 level for that missing leg D. And this is still going to call this a B in the weekly chart. Let's go to gold. This is going to be very interesting. Gold right now is down $1.60 at 1263.9. I went through tons of charts, and the way I'm looking at it, I don't see the strength yet in gold to sustain and move to the upside. These things happen very quickly. I discussed this last night with the whole thing about Bitcoin. I'm hearing so many people say, yeah, gold is being impacted by Bitcoin. No, they're really two separate things. Gold trades on there's a different mentality, a different set of players. Maybe there's a little bit, but I don't think so. So gold is down a little bit, and the dollar is still holding pretty darn well. Not great, but holding okay. It's down 3 cents at 93.68. We'll be back. We'll talk more about the rates, and we'll talk about crude
Today,
oil.
it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're back. So we're looking at this particular point, we're looking at the dollar. You can see that it's holding nicely. It needs to form a cup, another cup formation. It needs this right here. I'd say that without taking out 93.20, it needs to push above 94.60 to get this kind of little mini cup, and that'll be very good action. So far, it's just okay. This is very interesting. I'll just quickly do silver. Silver is at a new recovery high in leg B, pulling back towards the low of the day so far. It's that weekly chart that really worries me because the MACD is still very negative. Stochastics having trouble rallying. So just make it real clear, gold needs to go about another $20, $25 higher on a closing basis for me to say, aha, now there's something going on. And the downside, we've got, say, silver has to hold 16, the 9-period moving average. It really has to hold 16. If it goes under 16 again, it says, nah, it's not going to do very much. So let's do this. We want to look at the TLT, which is the T-bond. Oh, look at that. Down $1.78 at 125.40. That is a huge move, down 1.4%. Made a peak E-top, and now I can call that a technical top. I can put that little inverted V-shaped pattern. That's what happens when you get all the technicals say that peak D was a peak D that was serious, and then you make this isolated spike to the upside like a Chapman wave right arm extension, and then it fails very quickly. So this is going to be something to watch, and it's quite serious because if you look at the long-term chart, no, that's the gold. This is the, there we go. So if you're looking at, look, the 30-year yield just spiked quite sharply higher. The 10-year is about to take out the left side high. And the 5-year is a leg C, not leg D, is really much higher. So we're looking at, this is very, you see the distance between the 5 and the 10-year yields getting closer and closer, with 5-year leading the way to the upside. Now the 30-year is starting to follow. I suspect that we're going to see something where there's a conglomerate of isolated events that kind of come together. One could be the event of yields. The other could be the event of the tax bill on housing. Another could be the event of Bitcoin having its first really strong plunge to the downside with all the new regulations that have come in. those are my worries for the beginning of 2000. Plus, I've got that match in the yields to to what happened in May of, it was July of May 2000. But the difference is, no, I've got that wrong. Let me get that right. It was December, of course, December of 2000. I'm just thinking that it was 2015 and going to 2016. However, that was to the downside. I'm just saying that this is where yields could, in fact, impact the market. So I'm just watching this and saying, hey, we've got to be a little careful of being more isolated, more selective in the picks that we take. So let me just finish up here with the crude oil, CL. CL is trading up 25 cents. I still say trading range, trading. I was asked about my very long-term perspective on crude oil. I think the crude oil eventually is going to go to the teens because of all the different energy factors that are involved. You've got solar, you've got automobiles switching to at least some part where fuel efficiency is concerned. Because if you look at many of these cars, let's go to some of the cars that now, they used to be 6-cylinder, now they've got a 4-cylinder engine that might have a turbocharge. Hey, they're actually quite lousy. I mean, those engines, you put your foot on the gas and nothing happens, and then eventually something happens. But hey, that's the way it's going. So we're going to be seeing this, and I think that the impact for the oil-rich countries that are becoming oil-poor countries, I think it's going to be very serious. And I believe that within the context of energy choices, this is a period where we start to see energy choices. So, okay, enough said there. Next thing I was asked about is would I look at, here we go. Would I look at the XLF? Sure, the XLF right now, XLF is trading at 28.04, struggling to make a new high above 28.33. Yields are moving up. So this should help the financials. So we're going to see. I'm not sure why it's down right now. I think there are other things going on. It's just technically, I think, overstretched. The MACD is flattening out, about to cross negative stochastics under 80%. I think there's a little problem here, and I think there's going to be partly a market problem. I see the upside now as very limited. And in fact, we've gone back to a particular position that kind of says there's a little bit of insurance there, and I feel kind of comfortable about it. We'll see what happens. Next question I had was, where did it go? Yeah, thank you for the wishes I got certainly from people yesterday, for everyone in TFNN, season's greetings and all that. Yes, really appreciate it. Now, I had a question here. One of our positions, some subscriber said, why did we take a half position in an IPO? Well, the fact is that it was acting extremely well, and it was holding in a position where if it continued to act well like that, it could break out to the level where I could say, now we can split it in two. Half the position could have a raised stop, and the other half, it'd be nice to keep as a core, because it's seldom that IPOs have such a good move off the top. But I try to make the stop as tight as possible. So the reason was, yeah, I could have started a small position, but I wouldn't have known how to get into the next position if it worked out, and it was in an area that had the potential, I thought, to do very well in this particular market. Well, it pulled back a little bit more than I expected, but we had that stop in place, so we got stopped out, and that's it. So the question was, why would you take not simply take a nibble or a small position? It was only because it was acting well, and it stopped acting well. It went to a peak B and should have gone to C very quickly. It looked like it would, then went sideways. And in fact, I even wanted to say, take out, just get out of the position, Jay, if there's a bit of a rally. But instead, I said, no, let's give it a little room. We gave it a little room, took us out. So sometimes we're in small positions, sometimes we're in half positions, sometimes occasionally it's a full position. But this was one of those cases where, because it acted well up until then, and being an IPO, if it went further to the upside, I could then say, okay, now we're going to take this level. Let's say you got in at 20 and it's now 25. I would say 20, we're going to make our stop 21.5 on the call, and the trading position, I could raise that. I just didn't have a chance to do that. So that was the answer there. Normally, I would have said small. In this particular instance, it just, at that moment, it was acting quite well, and then it just stalled. I'm sorry. I just did my best there. Next question I had was, would I look at 2-year yields? I don't even know if I can get that anymore. I changed my... No, I don't. I just don't get that anymore, the 2-year yield. But I will tell you this, that the TNX is screaming to the upside in leg C. And that's the 10-year. And that's going to impact the home sector, HGX next. Look at the HGX. Yep, there it goes. Down 2.71 at 341.40. The Philadelphia Housing Sector Index. That's going to be something. That's another little chink in the armor that says start being careful. Oh, yeah, sure. I'll look at the estimate.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, a couple of questions here. Semiconductors and then coffee, which I haven't looked at for ages. Let me just get the JO is the symbol that I was asked about. What was the question? Basil. I'm on the road, so difficult to call in, but I'm going to listen to the replay later. I'm hoping you can take a look at ETF JO, ETF for coffee. I'm thinking about taking a long position. Thank you as always. Love the show. Rob. Rob, this is what I'd be looking at. Yes, I can see what you're looking at. There are signs that finally the lows are kind of slowing down in momentum. But here's the issue. The MACD needs to cross really strongly to the upside, and today's down move, well, the day's young, but it's down 12 cents at 15.04. This is the iPath Bloomberg Coffee Trust ETN. So I'm going to do this. Probably I'd like to say to you, let me look at it again tomorrow, because if it does rally, and it's at 15.04 right now, and it gets to 15.22 or something like that, so you've missed a couple of points, but at least you're moving to the upside. I don't want to catch a falling knife. We used to have a wonderful technician here in the den, Gigi, a goofy golfer, and bless his memory. And he used to always say, I'm going to sell you these steel gloves to catch those falling knives. And this is really it. You got to be really careful here. So I'm going to say to you, look, at 15.04, you could nibble at 15.04, but if you're like on the road and all that, I would personally have you put in a fixed a stop that really is a fixed stop. It's not a mental one. But if you're actually watching it, you can have that mental one. But a reason why is because if you buy it at around, say, 15.04 to 14.90, and then it has a nice spike into the 15.22, 15.33 area, I would immediately put in a raise stop. I wouldn't play games, because the weekly chart is starting to improve technically, but price-wise, it's just not showing the strength. Really, it hasn't closed above the 9-period moving average of 15.75 since it broke down way back in something like September. So I'd be really inclined to say to you, have a little patience. Yes, you could buy it here, but it's down 15.04, down 12 cents towards the low of the day. It is coffee, trades in a different kind of, look at this monthly chart. I mean, it was once in the 40s, now it's in the 15s. No, it was once actually at peak D way back in 2011. It hit $80. So yeah, it's had a huge decline. It's ready for a bounce. It doesn't know that it's ready for a bounce. We think it's ready for a bounce. So here's my thinking. If you want, and you can, you could nibble right here at 15.06. Well, by the time you get to listen to this, whatever it is, if it's somewhere in the 15.03 or higher level, I'd say, yeah, you could take a tiny little bit. You really want to see it start to make higher highs above 15.44. So I would prefer to buy it on a bit of a bounce. And then that means at least the trend might have changed. Let me look at the 120-minute chart, 100 A, B, C. The 120-minute chart, I think, made a peak D, and it's pulling back. So that's a good sign that it's had the capability of getting a D. I'm just going to say to you, you know what? Probably it's best to wait. But if you want to just start a little position, I wouldn't wait for the low that was made on the 12th of 14.67. I would have a real tight stopper below the low of the 15th. 1501, 1499, 1498 is where I'd start saying, oops, 1488 is where I would have a stop. Now, I don't know how this works with the percentages and all that, but if you're getting it at 1506, 1488 trying to get the bottom, because you're expecting that if it really begins a rally, it should go to the 1580s, 1630s. I think that's a good risk reward, but it might be a little early. If someone will remind me, or if you want to remind me, let's look at it again tomorrow. Maybe that's a better, another day is what it needs. Next question I had was, SMHs. SMH trading down 53 cents at 99.05. This is a terrible chart in terms of the daily. It's not even making an H. It hasn't even had the strength to really form an arch formation. The MACD is deflecting lower. If it was to go to 101.50 in the next 5 sessions, rather than retest the 97s, which is really what I think is going to do, that's different altogether. I would rather be buying strength than weakness in the SMHs. I think they are done for now. I think the candle that we saw, this huge candle on the 29th of November after making the high, that was in November, the double top, on the 22nd and 23rd, 22nd and 24th of 105.83, Chapman wave 2-bar reversal. I think this is serious. I think that semiconductors are in for at least a period of digestion. They've made an ABC today. They just made the D. in the 120-minute chart. Maybe now starts another arch formation. I might be wrong. I just don't see it. I would want to buy strength. I wouldn't want to be buying it now. So, oh wait, the question was, okay, SMHs and Intel in particular. Intel, NTC had a good session yesterday. Today it's giving back a little bit. It's down 10 cents. Yeah, this is a separate thing. Now, I must mention, Intel is in its own world. If you look at Lam Research LRCX, look at this. Look at the difference in the chart formation. Lam Research is done for now. It needs time. It needs made a leg E in the monthly chart, probably a peak E in the Chapman Wave 5. I'm thinking they could even be more like a hat-trick top here. I'm watching this real closely. If I'm wrong, I will know very quickly, because Lam Research, instead of being at 106 right now, would be at 203, and I'd be saying, oh man, what a great buy. I don't see that. And Amat Applied Materials, same thing. Great. These are two great companies. But they just had a spectacular move. They need a rest. So Intel is in its own world. I remember when they were running up, Intel was lagging. Now Intel's playing catch up. Will it make a peak C at 46.14 right now, down 12 cents? In the weekly chart, above 47.30? I have a feeling that it's going to have to work very hard to do that. I just think that this is the big move, and now it's going to be pulling back some. It is a really nice move. And as I say, I said earlier in the year, I thought that Intel, from the chart pattern, would start a really good move in the third quarter. What it did, I wasn't there, unfortunately. It had a great move, breaking from the 40s all the way from 40 level, 39, 40 level, to the 46 area today. That's a great move. But it actually earlier went to 47.30. So I think I'd be drawing in a rectangle here to say Intel sideways consolidation could squeak to a new high in the 47s, but then I think it comes back. So two separate things. This is my observation about Intel and the semiconductor index. They just do two different things. All right. Next question was SPY 60-day cycle repeating October's post-option expiration sell-off. Hey, that's a good point. You might be right, Sarah, but what I'm really looking at, let me just go back to the chart here to show you what ESH 18 on the E-mini. Look, this is a spectacular move. You've got a rising trend line support, which is actually during the break, maybe I'll get a chance to do it. I think it's at like a 63%, maybe 58%. I'm going to look at that, because when this starts to increase even more, that's really hazardous to your health and wealth. And I think it's now just in a little bit of an overbought situation. I'll be back. Basil Chapman, Dallas.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just be thorough about this. This is a leg E in the daily ESH18 March contract. 2698 was the high yesterday. 269800 was the high today. Parallel highs. So it still needs a lower high to even make a peak E. At this point, even though you could drop, you could see this at 2686. By the end of the day, you could see this down at let's just say, I mean, just for argument, the Dow's down 150 points. This is just, I'm just being theoretical here by looking at the chart to say what's important. And let's say the E-minis go down 15 points. And once again, I'm not saying it's going to happen. What I'm trying to explain is this is still leg E. And then tomorrow, let's say we're down here, the 26, let's say 2675 level. And we open, even if we open up huge, but we don't make a new high, that's where you get your peak E. Or if there is a bounce tomorrow and it doesn't go above 2698.00, it'll be unusual. It'll be the 3rd time in a row there's a parallel high and it's still leg E, not a peak. A peak has to have a lower high, not a lower high bar. Remember, that was the whole thing about my CD introducing the Chapman wave methodology. High bar. It's the bar itself. That high must be lower than the previous high. That makes a peak. Otherwise, there's no peak. And it could be by 0.1, 0.00001 if it was one of the currencies. That makes a difference. Okay. Now, what I am looking at is there's a tiredness that's setting in, but there's no real price pullback. So that means that the MACD is flattening out, but it could stay flattening out. Still very good. The stochastic at 91%, really strong, and on-balance volumes turned down. Okay, so it's turned down. But if the stochastic stays in the 90 to 92% area, any pullback will be a minor pullback, and you'll have another bounce. Just keep it in mind. That's the reason why I was asked about someone spoke to me last night and said, I just stopped using the MACD. It's a lagging indicator. I said, absolutely, it's a lagging indicator. I don't use it as an indicator for lag or anything. What I use is the stochastic. Look at the beautiful ictuses it gives you at the bottom when you can get it, if you're able to get it with the same day or just a day late. That turnaround stochastic is really important. And that's the torque. That's the turnaround. The MACD is the momentum. So that's important to keep in mind. Okay, enough with that. A couple of questions. Someone says, my ESH8 daily Chapman wave count is F. I have F in the SPY and the S&P. Let me see. Did you count? 260-150. Oh, you're 100% correct. When so many people have done the Chapman wave that when I'm corrected, I listen to them because that's important. So what we had is a pullback, but the MACD didn't turn down, so it's only a plus sign. And it says there's a real good chance you're going to go higher with an alternate count. And if the MACD continues like this, there's a chance that you only go to an F or a G. You don't go recycle to a D. So this is going to be very important. So we've got E, and this is an F. Sorry, my mistake. Everybody, take it back. This is an F right now, not an E. So that means I don't really have a choice, just because I like to be thorough in my work, is to say, this is the negative, this is the positive. I go F/B. A, B, yes, F/B. Because if that is it didn't, because the MACD didn't go down. I can't put a down arrow. But if it turns out to be just a continuation pattern, then this, instead of being an F, and this candle so far is what you would expect after an F, but it should take out the low of yesterday. That'll be a real F. This point is just, yep, F/B. So good point. And I'm going to say my bias right now is thinking F, but I'm just putting that in to say you got to have the MACD turning down sharply in the stochastic, certainly a lot lower than, I would say, 85% or 83% to think of it as an F. So far, I'm just letting that, let's let it play out, right? I'm sure that when the tax bill comes out, we'll at least see some flurry of activity to the upside, and then maybe it stalls. So let's keep that in mind. Okay, next question I had was XOM. So funny. So someone last night, is a person who's actually taken my courses, and I know that she's held Exxon for years, and she gets the dividend. And she says, what do I do now? So I said, you've got a wonderful cost basis for your ExxonMobil, XOM. Try to not interfere as long as you can. And she's written it out through thick or thin. Let me show you what I mean by thick or thin. Look at this. It was once at 104, and that was just back in 2014. And then it drops a little. It drops like from 104 to 66. I mean, that's a huge drop. Bounces to 95, goes back to 76, and now is at 82. So as a dividend stock, that's kind of what you want. You don't really want to care about it going up and down and up and down. You want those dividends. But there will be a point, if I'm correct, that at some stage, crude oil is going to start a very slow descent as the alternatives come in. Then probably Exxon is going to be, an integrated oil is going to be involved. So that's where I said, maybe you want to start taking the dividends and using the dividends in a different way for capital growth. And you're keeping the Exxon because you've got a really good cost basis, but you're starting to ameliorate any potential loss in capital by making up, maybe with the dividends going to something that's moving better. That's all. So that was an idea. So ORH, good question here about the ORH. Where is it? Well, ORH has got this arch formation, market vectors, oil services, ETF at 24.57, up 24 cents. I'm just saying to you, I don't think it's ready for prime time. I think that it's had its big move, and now I don't even think it's going to make an arch pattern failure right now. I think it's probably going to find support at 23.50 and then bounce again. I think it's stuck in a range for a little while. And I think that's really the question. WFT, I don't think I've looked at that for a while. Weatherford, right? Is that Weatherford? Yes, Weatherford trading at 3.66, up 6 cents. Oh, don't tell me. I forgot all about it. Weatherford was up in the 24s, and then it took a little dive, went to the 3s, and is trading now at 366. Okay, so this is a little different. This is my kind of a speculative stock. It's in a trading band, and I'm just going to suggest to you, Julie, that if you want to trade this, wait for it to pull back. It's got a pattern that says when I go to the lower range, I spike to the upper range. When I go to the upper range, I come down again. It's in this big rectangle formation. You can make other patterns, but I'm making it as simple as possible. Treat it as a rectangle. If it pulls back next time to the 350 to 346 level, you could take a little position there. And if it starts to move back higher, you could have a rally. See where this stops, because it's stopping right now 375 instead of going all the way towards the 4s. So if that's the trading range, then just take your rectangle and say, that's my new trading range. When it pulls back, now you have to go to, say, the 333 level and say, okay, hold there. I want to see you trade up to the 380s, and I'll get out, and I'll just keep doing that until one moment you're going to be wrong. So that's why I look at these rectangle formations. Is it going to make a bigger move to the upside? Well, that's the reason you want to pull it. You buy the pullback, because at some point it could make the U-shaped pattern and really start to climb. And that would be the best thing. So then what you would do is say, okay, it's actually holding well. The stochastic and MACD are good. I'm going to raise the stop on this position, or taking half off, leaving half on. Treat it as a trade. Basil Chapman, Tiger This Hour. I'll be back. And Dow's down 46. Okay.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
That's right, folks. Stay tuned. Another great hour with Steve Rhodes. And, of course, I think Dave White's away today. And then, of course, Tom O'Brien. And then you've got Andy Hecht at the end of the day. Hey, great programming. So this is going to be very important. What I'm looking at here, someone asked me about KRE. This is the SPDR S&P Regional Bank ETF, trading down 14 cents. This is, I treated this in discussing it. I said the XLF is really the big brother, and this is the little brother, or big sister. This doesn't matter. This is the follower. It hasn't been a leader at all. Just occasionally for a couple of days, but mostly it's been a follower. So I think it's still good for 2018. On the shorter term, I think this is really doing a lot of consolidating. And it's really interesting that the XLF is not trading much higher. It's down 2 cents today based on the yields skyrocketing like they are. So it's going to be a very interesting period we're coming up to. Big move suddenly in news. I bet it's something to do with the tax thing. Now the Dow's only 28. Down, S&P's down 5.5. Keep in mind, one other quick question is, where did it go? What was the question? Oh, I don't think I remembered. Oh, Bitcoin, GBTC, discussed this in detail last night. What I said was that when Bitcoin in this particular phase finally has a really serious decline, one of those 40, 50% declines, I think that's when our market becomes much more vulnerable. And it could look, there's a single leg F in the monthly. It's just a huge move. Weekly is E/C. I'm not even going to say overextended. I mean, that's the way it is. And this is E. This is an F in the daily, and all the technicals are saying so far so good. But be real careful, because at 3,425, if it starts to take out 2,500 support and then holds there for the entire session instead of having those daily bounces, that's the first sign to say, okay, now you got to be careful. I'm not saying don't trade Bitcoin or anything like this. This is the fund. I wouldn't be putting money in this until there was a really sharp pullback, because it only trades between 9:30 and 4. Bitcoin trades all the time. So I'm just saying that's what I'd be looking for. And is it a viable vehicle? Hey, if you can make money, it's a viable vehicle. But the more the percentage moves up and down, the greater caution you need to have. That's all. Hey, money management. Stay tuned for Steve. I'll be back tomorrow. Have a great day. And that's it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.